Are you struggling with Forex margin and profit and loss calculation? Well, in this short video, I'm gonna show you how you can do it easily. Gonna show you the logic, so the actual formulas behind the calculation, and then I'm gonna show you how to use the position size calculator to do the work for you. Because when we're trading, who has time to do arithmetics? But before we start, who am I? Well, I'm your host, and my name is Alejandro Zambrano, and I started trading in 2006, and I've been working for various brokers, some of them even listed on the New York Stock Exchange. I have a wealth of experience, and in this short video, I'm going to share some inputs to you to make you a more proficient trader. How do we calculate the P&L? Well, let's use a simple example on how to calculate the P&L so you can understand the logic. Imagine you have a trading account and you have $10,000 in your trading account. Now you want to trade the euro against the dollar, and today the price is at 1. So you buy euros for $10,000 at the price of 1, which means that you get 10,000 euros in your pocket. Now the euro against the dollar exchange rate gains. It goes from 1 to 1.10. You now sell the euros. Now remember, you have 10,000 euros in your pocket, but those 10,000 euros are now worth $11,000. So you made a profit of 1,000 USD, and that's how you calculate the P&L. How do you calculate the margin requirement though? So the margin requirement is what you need to put down to be able to open your position. To give you a different example, you want to buy a house. That house costs $100,000. You go to your bank, and the bank will usually lend you whatever is missing. So say that you have $10,000 as deposit. You put $10,000 down for the purchase, and then the bank will lend you the 90. So that's the deposit requirement. And when it comes down to trading, it's the same. We have a margin requirement. So if you look at the row 2 here, it says margin requirement 1 to 200. That's your typical margin requirement across the world, with the exception, of course, in Europe and the UK, where the margin requirement is higher. Now, 1 divided by 200 is 0.5%. So if you wanted to go and buy those 10,000 euros with your $10,000, you only need 0.5% of that. So to open a position of 10,000 euros, you would actually just need $50, because $10,000 multiplied by 0.005 equals $50. And this is why people go into Forex trading, because you can open quite large positions with a very small amount of money. Now, these examples are simple, right? It becomes much more problematic when you're dealing with other type of currency pairs. Say, for example, you want to be trading the euro against the pound. Now you want to buy it, which means that you are buying euros by selling British pounds. But hold on, you don't have any British pounds in your account. You have $10,000 in your account. So what's actually going on here? Well, your broker will lend you British pounds that you can sell. Now, what happens in the background is that technically, the first thing when trading this is that your broker will create an order in GBP USD. So they're going to take your 10,000 US dollar, exchange them to British pounds. If the rate is at 1.21, then you're going to get 8,242 British pounds. Now, then these British pounds are sold against the euro, and 8,242 British pound turns into 9,725 euros. Now, if the exchange rate went from 0.5 to 1, then that means that your 9,725 euros is now the same as 9,725 British pounds. So when you close out the position, you now get more British pounds back compared with what you actually sold to be able to open this position. The difference is 1,482 British pounds. And that is your profit. But because you have an account in US dollars, this is converted into US dollars. And all of this is happening in real time, so you don't have to manually calculate your profit in your base account, which in this case happens to be US dollars. All right. Now, as you can see, this quickly became quite complicated. So a lot of people find it difficult to understand exactly what's going on. As well, in my experience, when dealing with thousands of people across the world, is that a lot of people don't know what position size, like how much they should buy for or sell for when they're trading. And that's why we created the position size calculator that works on the ATFX MT4 platform. If you're using another MT4 platform, then you can also use this for a limited time to try it out. So let me explain a little bit about how this works. So in the top here, you can put the order type. Instant would mean that you would buy or sell at the market rate. You can click on that and then you can create a pending order, which is when you want to be trading at a different price than the current price. Then you can press this button here and that would change between the buy and a sell order. And then you can actually insert your stop loss, take profit, and you would also insert how much you want to risk per trade. So in this specific case, I want to be risking, say, 1% of whatever the balance is on that account. And then it's actually going to tell me, based on the entry and based on the stop loss, what lot size you would need to have. I know there's a lot of info, so let's actually take a look how it looks like on the MT4. Okay, so this is the euro against the USD, and I have loaded the ATFX position size calculator. As a default on MT4 platforms, you don't actually have the position size calculator. So as I mentioned just before, a lot of people, when they begin trading with the MT4, they would open positions that are way too big, and they'll either find themselves doubling their account or losing a large chunk of it if they go too aggressive with the lot size. Lot size is just another word of saying size or the quantity of what you want to be buying. So let me show you how smart this is. So this account is a USD account and it has a balance right now of $9,936. And this is the Euro USD and it's on instant. So it's going to calculate my parameters here based if I buy on the current price. Now I'm looking at this 4-hour chart and I can see that the price is creating higher and higher lows. So I want to put my stop loss just below this low, and that specific price is 0.0197, and I want to book a profit around these highs, and that will be 0.0357. Now this is a smart calculator because it's gonna tell me how much to buy if I want to risk a certain amount of money. So here, for example, say that I want to risk a good 2% of my account. So 2% of my account is $196. Now, if I buy here and I have my stop loss here and the market drops and I just want to lose 2%, in other words, $196, then I have to buy about 0.23. So when I'm trading here, I put 1.23 and then I hit that buy button. It's also going to tell me the margin requirement, like how much money do you actually have to even open this position. Remember what I said about buying real estate, right? You go with a certain amount of deposit and then your bank is going to lend you the rest. It's exactly what's happening here. You can open the position and you put down some margin, and in this specific case, ATFX is going to lend you whatever is missing. Now, what I recommend is that you actually just download this. I'm going to put a link into the description and in the top comment. Thereby, you can just try it out on your MT4. And if you do not have an MT4, don't stress. Just go to atfx.com and download your MT4 copy today. If you liked the video, hit that like button. And for any questions, put them in the comments. Thank you so much for watching, and I hope to see you guys soon.